Hi everyone. In the previous videos, we have discussed the section A, section B, and the first question of section C. And now, in this question, we will be discussing the first 15 marker of section C. And the question goes as follows. Anya is employed by Zenith Limited and she also has some trading profits and property income. The following information is available for the tax year 24-25. Anya received employment with Zenith Limited. Anya received a gross salary of 70,000. Okay, so this is discussing the income tax part, computation part of it. So now the first part is relating to the employment income that Anya earns from Zenith Limited. Anya receives a gross annual salary of 70,000 pounds. From 1st October 2024, Zenith Limited provided Anya with a living accommodation. The company purchased the property in 2010 for 100,000. So as we can see, the property is being purchased in the middle of the year because the year runs from 6th April to 5th April, and it's being provided in the middle of the year from October 1st. And the property was actually purchased in 2010, which is more than 6 years after which it was being provided to Zenith. Its market value on 1st October 2024 was 250,000. Since the property was value is having more than 75,000, this will give rise to an additional benefit on the property that is being provided, the employment accommodation benefit that is being provided to the employee, that is Anya. And after that, we can see a further 4,000 pounds was spent on improving the property in November 2024. Always remember any improvements to the accommodation benefit, the property relating to the accommodation benefit that is being provided. And these improvements, if they take place in the middle of the tax year, they are completely exempted and they will not be considered. So for that reason, this is just a diversion to you all in the exam preparation. So this is nowhere relevant to us. If any improvements take place before the beginning of the year, then that will be added to the market value, but otherwise it is exempted. Next is the annual value of the property is 6,700 and the living accommodation is not job related. So it will give rise to a job related, it will give rise to an accommodation taxable benefit. All right. Next, Zenith Limited purchased furniture for the living accommodation during August 2024 at a cost of 14,000. So, along with that, along with the accommodation benefit, a furniture is also being provided for for Anya to her accommodation. So that will also give rise to a taxable benefit. Next, Anya paid a professional subscription of 280 pounds and a subscription to a health club of 650 pounds. Neither of these subscriptions were reimbursed by Zenith Limited. So because these were not reimbursed by Zenith Limited, this means these are deductible expenses. But now we should identify out of both of these which is directly relevant to the work that Anya does. So here we can see the professional subscription was to HMRC approved professional body directly relating to her employment duties. So which means the professional subscription that Anya paid is directly relevant to her work, and the subscription to health club of 650 is nowhere relevant to the work that she does. So for that reason, this is exempt benefit and should not be considered exempted, and this is a disallowed expenditure. All right. Suppose that the professional subscription, as you've seen, is directly related to their employment duties, and she uses the health club to meet the clients of Zenith Limited. That meeting clients of Zenith Limited does not mean it is an allowable expenditure, so it is completely disallowed. All right, we have completed the employment part of it. Now moving on to the self-employment. In addition to her employment, Anya started a business selling craft products. She spent 750 pounds on advertising in March 2024, which included 100 pounds spent on lunches for potential suppliers. So as we can see, the 750 pounds which was spent in March 2024 included the 100 spent on lunches for potential suppliers in pre-trading expenditure, because the business was starting in June 1st, 2024, which means this March 24 was a pre-trading expenditure. And in pre-trading expenditure is only those expenditure are allowed which are directly relevant to the business and will also be considered as allowable expenditure when the business has started. So as we can see, this $100, £100 spent on the lunches for potential suppliers is entertainment of suppliers, which is a disallowed expenditure. So this is disallowed. And the other is 750 pound out of 750 pounds, 100 is disallowed. So the other 650 pounds is for marketing, which is directly relevant to the business, and hence it will be considered as an allowable expenditure. All right, moving on to the next part of it. Anya purchased a car on 15 June 2024 for 11,500, which she uses 60% for business purposes. Okay, important point to be highlighted. The car has CO2 emissions of 47 grams per kilometer. Because it has the car has CO2 emissions of 47 grams per kilometer, that means we're considering capital allowances. It will be part of the main pool and not the special rate pool. During the tax year, Anya drove a total of 23,000 miles in this car and incurred motor expenses of 2,300. Okay, motor expenses of 2,300 were incurred. But what is happening of this 2,300, only 60% is relevant to the business. So only that proportion will be considered. After that, it has been mentioned, Anya decided to claim the flat rate mileage allowance in respect of the car. Okay, so this is a very important concept. When a flat rate mileage allowance is being considered, that means Anya would not be eligible, or the Anya self-employment will not be eligible for capital allowances or any car related expenditure. We will be taking only the mileage allowance, mileage proportion part of it. All right, mileage, we have the flat rate scheme, right? The mileage per pence, that first 10,000 miles would be at 45 pence, and more than 10,000 miles would be at 25 pence. All right, that is what we will be considering for the car related expenditure. And whenever this has been mentioned, that always means capital allowances and car related expenses that are related to business will not be considered. All right. Next is in the 10 months from June 1st June 2024 to 31st March 2025, Anya made a total cash sales of 9,750 pounds. Because in self-employment, it is important to remember that the default basis is cash basis and not accrual basis. So here it has been clearly mentioned it is cash sales. So we can understand from this as well that the total cash sales were made. All right, next and the third part is property income. So here we have three types of incomes. One is employment income, one is from income from self-employment, and the third is property income that is being tested over here. All right, in property income, Anya rents out a furnished room in her main residence. So this will be considered as a part of rent a room relief that would be available. She received monthly rent of 800 throughout the tax year 24-25 and paid expenses of 275 a month in relation to the room that was rented out. Anya always uses the most beneficial basis to calculate her taxable property income. So because this is rent a room relief, it will be calculated as the difference between the rent month to annual rent that she receives minus 7,500, or if the 275 into 12 is higher, whichever is more beneficial, is that beneficial means reducing your property income, taxable property income will be the most beneficial basis. So that is what we'll be considering. Now we'll look at the first requirement, which asks us to calculate Anya's taxable income for the tax year 24-25. So now that's what we'll be considering. So all these three incomes, employment income, self-employment, and property income, are only non-savings income. So non-savings income. And again, remember guys, they're only asking us to calculate the taxable income and not the tax liability. All right. After that, they also have mentioned a note saying that you should indicate by the use of zero any items which are not taxable or deductible. Here, as you can see, if they mention this clearly, or usually even if they don't mention it, always remember if any items are not taxable or deductible, you should mark a zero, and you will be getting zero point 0.5 marks for each of those values. So it is important that you mention those values with zeros, though your answer at the end will not be affected by it, but you will be losing out on your step marks for those. All right. With this, let's quickly move on to the question, answering this question. So this is our question requirement. So let's quickly paste it up here. Now, Anya's taxable income. First would be her employment income. All right. This we can show it as a working or we can directly present it here. But I would prefer showing it as a working. So showing this as a working would be working one, employment income. Employment income, what is it first having? There is first a annual salary of 70,000 pounds. All right, annual salary has been considered to be 70,000 pounds. Next, we have is provided with living accommodation. Employment income consists of salary plus all the taxable benefits that should be considered along with that. Next would be jo- non-job related accommodation. Related accommodation benefit. Non-job related accommodation benefit. How do we calculate that? Accommodation benefit. Always remember, because this has a lot of points that have to be considered. One is the annual value, and the other is the excess because it is a higher valued property. So you'll be having an additional benefit on that, additional taxable benefit on that. These two are included. Along with that, there's also a living furniture relating to the accommodation. So because all these are considered, we will show this as a separate working. We will show this as a separate working. Working 2. All right. Now, because we are considering this as a working 2, we can simply write this as accommodation benefit. All right. This is just for your reference that I wanted to mention it was non-accommodation benefit, but you can also mention it just as an accommodation benefit. Okay. Working 2, accommodation benefit. Now, what is happening? First, we have the annual value. The annual value of the property is 6,700. But was the property being provided to Anya for the entire year? No, it was not. It was only provided from 1st October 2024. That means from 1st October 24 all the way until 5th April 2025, it is only being provided for a total of 6 months. So that means the annual value of the property should be prorated for the period that it was provided for. So this would be equal to 6,700 into 6 by 12, giving your annual value of 3,350. Next, annual value of 3,350. Next would be additional benefit. What is happening? Because the value of the property is in excess of 75,000, an additional benefit arises. How do we calculate additional benefit? Additional benefit is nothing but the excess, that is 250,000 minus 75,000, excess over 75,000 into the appropriate percentage. Appropriate percentage is nothing but the ORI which will be provided to you in the examination. It will be 2.25% and it will be provided to you in the examination. All right. I'll show that value to you so that these are all the values that you do not have to spend time in remembering the items or values. All right. Official rate of interest is also known as ORI, which is at 2.25%. So that is what we'll be multiplying this with into 2.25% into 6 by 12 because we'll only be considering it for 6 months. So that will give an additional benefit of 1968.8. All right. Additional benefit has been calculated. Now, will this give rise to any additional expenditure? As I told you earlier, the 4,000 on improving the property will not give rise to any expenditure, will not give rise to any taxable benefit because the improvement happened during the tax year. So you should write that improvement of the accommodation. You should include it here and mark it as 0. All right, along with this, with this we have completed all these three parts. Now we can see a furniture is also being provided as a part of the accommodation. So what is a taxable benefit for furniture being provided as a part of accommodation benefit? The value of it should be multiplied with 14,000 with 20%, and that should be included. But now what is happening? Sorry, I crossed this out, but what is happening? So furniture provided with accommodation. So that would be equal to 14,000 into 20%. Again, it should be prorated for the period that it is being provided for 6 by 12, giving us a total of 1400. All right. So now with this, we have completed the total computation of the accommodation benefit. Total accommodation benefit would now be equal to sum total of all of these, making it a total of 6718.8. So you can directly take it here is equal to this 6718.8. Accommodation benefit has also been considered. Now this is done, and this is done. From that, now we'll be taking a look at the last part of it, which is talking about the fees that are not being reimbursed. Less professional subscription. Always remember professional subscription, because Anya is paying herself and is not being reimbursed, it will be a deductible expense, so minus 280. But if it is being reimbursed, then it will be considered as an exempt benefit, and instead of this, it should be marked at zero. All right. That is an important point to remember. Next is the other is subscription to a health club. Subscription to a health club. As I've already told you earlier, it is not a deductible benefit because it is not directly relating to the work that she does. Subscription to health club. So this will be at zero, making her total employment income is equal to sum total of all of these. All right, making it 76,439. Employment income would be is equal to this will be your employment income. All right. With this, we have completed one part of it when in calculating the employment income. Now, let's quickly move on to self-employment. Income from self-employment. So again, let's show this as a working. Excuse me. Income from self-employment. Let's show it as a working over here. King 3. Self-employment. As we can see, first we will start off because it should be calculated in total. We will be calculating it from total cash sales made. Cash sales made during the year. How much are the cash sales made during the year? It is 9,750. So we have taken that value here. Next, after the cash sales that were made, what do we deduct from this? We'll have to deduct the expenses that are relevant to the business. Less pre-trading pre-trading expenses. How much would that be? That should be advertising is a pre-trading expenditure. So that should be considered. So it will be 750 minus 100. So pre-trading expenditure of 650 is an allowable expenditure. In the less part, do we also deduct what do we have used? The client entertainment, potential suppliers entertainment, supplier entertainment, entertainment. It is not an allowable expense, so that should be marked at zero. It is a disallowed expenditure, should be marked at zero. So with this we have completed this part of it, and this one is also completed. Now we will be coming to car. So in car, what has been mentioned to us? In the car part of it, it has been mentioned that it is used 60% for business purposes. The car has CO2 emissions of 47 grams, and during the tax year drove a total of 23,000 miles. And Anya decided to claim the flat rate mileage allowance. Because she had decided to use the flat rate mileage allowance, what will happen? Less mileage allowance that is available to her. Mileage allowance. How do you calculate the mileage allowance? First, you can show this also as a separate working. You can show it as a working 4 in which you will be calculating 4 mileage allowance. First, what would be the total number of miles? Number of miles would be equal to 23,000. And you can see, if we have seen the earlier, it is only 60% for business use. So that means the number of miles should also be prorated only for the business use. So it will be 13,800 miles would be for business use. So what is the mileage allowance? Mileage allowance for the first 10,000 miles would be at 0.45 pence. Again, if you don't have to remember, you do not have to remember this because it will be provided to you in the examination. As you can see here, up to 10,000 miles is at 45 pence and over 10,000 miles is at 25 pence. So it would be is equal to 10,000 into 0.45. Next, as the first 10,000 is covered, mileage allowance for the next 3,800 miles would be at is equal to 0.25 into 3,800, giving the total mileage allowance of is equal to sum these both, making it a total of 5450. The total mileage allowance here that we will be considering would be is equal to minus this. All right, mileage allowance has also now been considered. But here we can see the car had incurred motor expenses. Is motor expenses relevant to us when we are taking mileage allowance? No, it is not. So, motor expenses, you should include this though, and you should mark a 0 beside that. And with that is how you calculate your income from self-employment. All right, total income from self-employment would be at is equal to sum of all of these, giving it a total of 3650 is equal to 3650. All right, now we have calculated your income from employment income and your income from self-employment. Next comes your property income. Show it again as a working 5. And how do you calculate your income from property income? Working 5, property income. You take first your rent received. Rent received is for the entire year she has received a rent of 800 pounds. So that means is equal to 800 into 800 into 12 would be giving you a rent received of 9,600 less we have to reduce the expenses, or because she uses the most beneficial basis. The most beneficial basis means it should either be the expense that you reduce should be higher of 7,500 or the total expenses. So here for rough purposes we can calculate this is equal to the total monthly expenses are 275 is equal to 275 into 12, As we can see, the deduction that she will be getting if she uses the expenses is only 3,300. So we will be deducting rent a room relief of 7,500 less rent a room relief minus 7,500. This will also be provided to you in the examination. You can see the room limit is 7,500 and this will be provided to you in the examination. But the only thing that you should remember is for rent a room relief, whenever you want to take it, it should be higher of 7,500 or the actual expense incurred, whichever is higher should be what you'll be preferring. So now coming to this, total property income would be at is equal to sum. These both would be 2,100 and that is what we'll be taking here is equal to 2,100. And with this, we have calculated our total income to be a sum total of all three of them, making it to a total of 82,189. But what is the question asking for? The taxable income. So in order to calculate taxable income, should we deduct? We should deduct the personal allowance from the total income. And because the individual's income is within the threshold of 100,000, that means there will be no reduction to personal allowance. So less personal allowance would be at is equal to minus 12,570, then giving us a total taxable income of is equal to sum, giving us a total of 69,619 pounds. That is the taxable income of Anya. So in this, the most complex calculations are involved with employment income, because of which employment income will be getting a total of 6.5 marks, and income from self-employment will be giving you 2.5 marks, making it a total of 9 marks, and your property income will be for 1.5 marks, and your personal allowance will be for 0.5, making it up to a total of 11 marks. And that is how we will be calculating it. All right, guys. Keep it very simple. Like go step by step when you're solving your section B questions. First, we have identified employment income. Now, I try to remember or memorize all the aspects that are being tested of the employment income. If you are thorough with those, your question will be you will be at a very good spot in answering the question. And with that, we were able to finish all the employment income part of it. Next, once we have completed employment income, what did we do? We moved to computing the self-employment income. And self-employment income, once you've computed that, we will be showing this value. So what happened? Now our presentation of the question as answer has become very easier, because all the computations have been shown in the workings. All these 5 workings have played a very crucial role in our computations. And remember, all these workings, directly adding the value here will not give you any marks, but showing the workings, and these workings will be giving your marks that you deserve. All right. Fragment your answer into simpler and smaller parts so that you'll be able to answer that directly and then move on to the next part of it. All right. With this, we'll move on to the second part of it, because we have now answered the 11 marks. Now we'll be moving on to the 4 marker part of this question. Coming to the second question, that they're asking us to calculate the amount of income tax that Anya saved for the tax year 24-25 by choosing to claim the flat rate mileage allowance instead of capital allowances. As I've already told you earlier, there are 2 types. One is flat rate mileage allowance and the other is capital allowances. Flat rate mileage allowance is nothing but, if you're using the flat rate mileage allowance, we will be taking the up to 10,000 miles at 45 pence and the over 10,000 miles at 25 pence based on the business miles traveled. But if we use this, the expenses, the motoring expenses and the capital allowances will not be considered. But if we are using the capital allowance as part of it, then the flat rate mileage allowance will not be applicable, but the motoring expenses should be considered. So the question here is asking us how much would be the deduction that would be available if we use mileage capital allowances, and how much we have already calculated for the flat rate mileage allowance in the previous question. So we can take that values to identify that. And here it's basically asking us how much income tax would have been saved. So that means from this it must be the case that the flat rate mileage allowance is giving you more deduction, and because of that how much income tax is being saved is what we'll be calculating. So let's quickly jump into solving the question. First is the deduction available on using capital allowances. Well, on using capital allowances, how do we calculate that? First would be your capital allowances. Capital allowances, as we already know that Anya, this car is making CO2 emissions of 47 grams per kilometer. That means the first year allowance would not be available because it is not a zero emission car. And since it is having emissions of 47 grams per kilometer, that means it will be a part of main pool and not special rate pool, because the emissions are between 0 to 50 grams of threshold. So that means only WDA is applicable at 18%. So now the capital allowances that would be available would be at is equal to the cost of the car at 11,500 into, it is only being used for 60% for business purposes, so into 60%. Now, the other thing that you should consider is Anya is starting to trade from 1st June 2024. That means it is only running from 1st June 2024 to 5th April 2024 and not for the entire year. That means capital allowances will also be prorated to the period that they are being provided for, which is 10 months, as you can see from here. So from this we can identify that it is 10 months. So this should be divided by 10 by 12, giving us a total of into 18%, making it a total of 1035. All right, because 18% is the WDL available on 60% of usage of the car for 10 months. That is how we have calculated the WDA. And because of this capital allowances, what do we have? Motoring expenses are also a deductible expenses. So that means motoring expenses would also become deductible, which is of 2300. So it would again should be prorated for the business use, because motoring expenses is for the entire usage of car, of which only 60% is for business purposes. So is equal to 2300 into 60%, making it a total of 1380. So the total available deduction would be simply at is equal to sum 5 plus 1380, making it a total of 2415. But total available deduction using flat rate mileage allowance would be 5450, is what we've calculated in the previous question. As you can see, total mileage allowance is 5450. So that means the available deduction using mileage allowance is 5450, but the deduction using capital allowances would only be 2415. That means savings incurred would be equal to this minus this would be the savings. But now what addition or this savings, or you can also write it as additional deductions. Now what they're asking us for, they're asking for the amount of income tax that Anya saved. As we can see in the previous solution that we have done, Anya's taxable income is at 69,619, which means that she is a higher rate taxpayer. So that means this savings would have been actually normally taxed at 40%, but this is being saved. So that means tax savings would be at 40%, would be at is equal to 3035 into 40%, 1214, and that is our answer. And with this, we come to an end of solving the first question of section C. Sorry, the second question of section C. All right, guys, in the next video, we will be discussing the final question of section C, and I will show you the marks that you'll be getting for each of these. For calculating this part of it, you will be getting 2 marks. This will be zero point 0.5. This will be giving you zero point 0.5 again, giving you a total of 3 marks, and the final tax savings will be giving you a total of 1 mark. And with that, you will be getting total 4 marks by just presenting it in this manner. All right, with this, we have come to an end of this question, guys. If you have any doubts, you can always feel free to ping in the comments, and I will try to answer them as soon as possible. And also, the contact details are shared in the description, and you can feel free to reach out to me at any time. All right, bye, guys. See you in the next video, and all the best for your preparation.